What's the resolution on all of this trade business? We get mixed signals day in, day out. Other countries, deciding what to do, and at some point it will be taken out of the US's hands. Correct?
Yeah. I mean, I don't know the resolution any better than anyone does, because all of this really is up to one person, and that's President Trump, and he prides himself on being unpredictable. But so far, the trend is in a bad direction, where the United States acts, other countries respond, the United States responds to their responses, et cetera. So it's not hard to see this spiraling in a bad direction.
How much has it already impacted things like corporate strategy, consumer confidence? Are you seeing any real economic impact yet?
Look, this is something I wouldn't expect to impact consumers, but it is something that businesses are facing increased uncertainty. And you're starting to see some supply chains unwind. You saw, obviously, Harley-Davidson move their production to Europe, and I think you'll see some delays on investment as well, as businesses wait to see how all of this shakes out.
Speaking of which, we're getting signals that maybe China is doing things other than just rhetorically targeting the US. There's a potential currency movement that might be a lever that China is pulling, bond sales and so on. Are you seeing any of that in China's movements, or is China acting solely for its own good?
Right. Look, you're making a very good point, which is that China has a lot of tools at its disposal. We can put tariffs on Chinese products, but if they don't want the trade surplus that they have with the United States to fall, they can just depreciate their currency and offset it in other ways. And that seems to be one of the tools that they're using right now. So in a trade war, we have some leverage from having the larger deficit, but they have a lot more economic tools that they are able to use at their disposal.
Jason, nevertheless, this doesn't seem to calm equity markets' nerves, particularly Chinese equity markets selling off, emerging markets, equity markets selling off, the FX markets of the Indian rupee, for example. Talking of the fact that, of course, you're at the Peterson Institute and it's the Peterson International Economics Institute. What about international economics, the ramifications of this trade war on the emerging markets? Are you concerned?
Yeah, look, no one wins a trade war. The United States won't win this. China won't win this. Both countries will be worse off. And you see that reflected in equity markets in both of them. China, as I said a moment ago, has a lot of tools, but it's also enormously vulnerable. It's still a very export-dependent economy, less dependent than it used to be. Hopefully this will encourage them to continue their shift towards domestic consumption so that they're less reliant on the rest of the world. But right now, this is definitely the biggest minus in the global economy, not just the U.S. economy.
And do you think it will be the emerging markets that lose the most? You say no one can win, but who loses the most in terms of corporates, in terms of regions?
If you look at the equity markets, they're telling you China is losing more than the United States. I'm a little bit less sure about that, because at the end of the day, they can shift. They can sell more to Europe. They can integrate their supply chains more with Europe and do that at the exclusion of the United States. So I think if the United States is going up against Canada, Europe, Japan, China simultaneously, all of those countries will have an interest in banding together. They'll be able to deal with some of the downsides, and it'll hurt the United States worse.
And that's a fascinating perspective, particularly as we see Europe. I'm looking there and gathering in Brussels at a summit at the moment, and much does bring them together, like their mutual dissatisfaction with the United States, their dissatisfaction with the UK as well amid Brexit. But much tears them apart, particularly the immigration crisis. What is your outlook for Europe?
Yeah, I think the immigration is actually probably the biggest source of populism in Europe, in the United States. Europe's economy has picked up quite a lot. The Eurozone crisis is looking increasingly behind us, but now, of course, we have this new risk in Italy that everyone is mindful of. I still think Europe has a lot more room to grow, room to bring its unemployment rate down. A more accommodative fiscal stance, I think, will help. So I'm mostly optimistic, but certainly the risks there are elevated.
Well, as we can see, Jason, you're at the Aspen Ideas Festival and you're going to be taking part in the Intelligence Squared debate tonight. The motion is globalization has undermined America's working class. What's your best argument?
I'm going to be arguing against that motion. And my two arguments are, one, that globalization has brought down the price of consumer goods and increased the variety of consumer goods. People often say that's trivial and minor. If what you care about is real wage growth, buying things more inexpensively means your wages are going a lot further than they used to. And then my second argument is that globalization supports better jobs. The typical exporting job makes 18% more a year than just a purely domestic job. And so globalization certainly has its downsides. We should work on those. We should make it better. But on balance, it's been very good for the working class.